Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. And a heavy run up in the markets today. Earnings getting things kicked off with a bang. I could bring a few things to your attention. Some of them would be that this is how we normally or have been starting most of the earnings seasons over the past few times that we've been through them. So this isn't uncommon to see the big bump. Second of all, this just looks like still a continuing big wave 3 to me. I've been going into a little bit more detail on this structure here with my subscribers, so we've been looking at a lot of these levels that it's been coming up to and against, and I'll be looking with them now tonight and on where we're going to start to get out of our longs and into maybe some shorts here. But as it is right now, this just looks like a really nice 1, 2, 3. That is a huge three wave that we have here in the markets. So a very sizable three wave. Not uncommon to see this type of a big move at the beginning of earnings season. Not everything followed along today with the big move up, but really it is what it is. It made for some decent trading. The big gap today really hurts a lot of people. It gaps up and you wonder, okay, is it going back down? Is it going back up? What's it going to do? After the gap up, we really didn't see much of a move at all after that point. We did break above these levels here, this heavier level here of the 10,300 mark. It did get above that. It did test 10,400 at the very end of the day, but and a couple times during the day got close, but wasn't able to hold it. This is just consolidation up in here. Not uncommon to see this. Big gap up, a little bit of a move here, and then just consolidate the rest of the time. So it made for some once again, pretty sloppy trading. Not much to be done if you weren't already long from the night before. This is why. Being held up by the 200-day moving average. Pretty obvious here. We did get above it for a while during the day, but once again, constantly being pushed down and pushed down and pushed down and pushed down. This is an area the bears are certainly going to want to hold right up here at that 200. So we'll see if it's able to push itself up and beyond this. So far, the move's been pretty strong from just a wave structure standpoint. From a volume standpoint, yeah, not too bad. Most of the move hasn't been too bad. Today's move was, to be quite honest, pretty strong. It was actually a pretty strong day volume-wise for the markets and the bulls. So, not convinced. The bears would like to see this 200 hold. I would like to see the 200 hold. That'd give me a great entry into some trades. But this does not mean that we have to turn around at this point. Really be watching this level up here. That's around about 10,450, 10,460, somewhere up in that area. That's your next really major line of overhead resistance. The NASDAQ saw a little bit of a bump up today. We did get above 1830. Once we did, that was able to run a little bit higher, coming back into the 1840, 1850-ish range. So the NASDAQ also continuing along with this big wave to the upside, waiting for some confirmation on a move back down. I'd be looking for something maybe back around 1820, 1810, somewhere down in there. I think might give you a good opportunity to dip your foot back into the short side. As of right now, though, the move is strong to the upside. If you have not or are not long right now, you might just want to wait this out. From a daily standpoint, you can see it coming right up into this big, heavy overhead area of resistance. You've got the 20 that's been beat, the 200 today that was beat, surprisingly enough, by the NASDAQ, and then the 50 as well that we're just about to tap or came pretty close to it today. High of 1851, MACD, or the 50-day moving average at 1855. So people, you can see, kind of front running that moving average before we got up to that point. From a weekly standpoint, also starting to push its way back up. Ultimately, your bigger overhead area is really the 1900 area on the NASDAQ. Not sure that'll make it this week, but I would think that would be the overall bigger target for the bulls to try and retest. SPX on a 60-minute pushing up. 1100 was my area here to the upside. If we got up and over about the 1080 to the 1085 area, sure enough, that's about where we stopped today. 1099.5. 11.46, so got it within about a half a point here. 1100 is a pretty major area. There's some other areas above that then that we will definitely want to be watching. That's 1110, 1115-ish area. And then, quite honestly, we may have some pretty fair skies all the way back up to retest these highs. If you're, I don't know if any of you guys subscribe to Elliott Wave, but I would not be surprised if they're starting to relook at maybe some of their wave counts, or maybe starting to get a little bit nervous. I would think that if for some reason we broke to new highs here, up and above a lot of these highs, that might blow away some of the counts that they've been looking at, and they're not going to have a lot of happy people on their hands. But here's your overhead resistance area. So that 1110-ish area that I talked about, 1110 to 1115, somewhere up in that area. Then any push back up and above this area here, which is right about that, I don't know, 1118 area, 1115 area, I don't know exactly where that's at, I think takes us right back up to retest 1130, possibly higher than that. From a weekly standpoint, we are just at the 1095 area, which is that 50-week moving average. A little early to tell. We can push ahead above that. What I'm really looking to see is if we'll hold that by the end of the week. Now, this was interesting. The VIX was up. So go figure. We have non-confirmation by the VIX today. Markets up big. VIX up 0.5%. Not bad, but up nonetheless. Should have been down. I mean, I would have expected to see it back down in this area, into the 20-ish area. Not even close. Not even close. So a little non-confirmation today by the VIX. From a weekly standpoint, also holding within this area, not real, we're back into kind of the yellow zone here. There's not a lot of fear. We're getting a lot of consolidation here in the markets within the fear gauge, and that's the VIX, just still sitting in or around the yellow area. Now, Apple took a dive today, down 5.49, $5.50. Curious because the markets, of course, went up. The only news I really heard was that Consumer Reports didn't give Apple a thumbs up. Maybe there's more news than that, but that doesn't really matter to me. The fact is, this is weak. I mean, if Apple's going to pull its weight, man, it's got to start to pick it up a little bit. Now, Apple does report here in the next couple weeks, and this is not a big surprise out of Apple. If we go back to the last couple earnings seasons, you'll see that when the earnings season started, if I'm not mistaken, Apple didn't fare so well. I don't think it like screamed upwards or anything. It wasn't until earnings that it really started to kind of scream upwards. I'm not saying that'll happen this time, but that's what has happened in the past. Apple kind of drops, or it doesn't do a whole lot until its earnings are announced, and then all of a sudden there's a big spring up in Apple. From a daily, you can just kind of see the consolidation here. Look at this. If you invested in Apple back in April, you haven't really made anything. I mean, Apple's just moving sideways here. There's a lot of stocks doing this. Baidu's doing the same thing. Just consolidating right in through here. So we're still waiting for more major breaks of these heavier levels to see if we can get some actual movement to this, to Apple, to these stocks. Here it's holding. If it finishes the week looking something like that, it's really just in a low base formation. We just kind of look at it as that, waiting for breaks below the 20-week moving average. Otherwise, if this thing will spring upwards, looking for that blue line to hold it. FAS on a 60-minute also had a nice run up, 7% today. That's big, but look at the gap. How do you play that? It's tough. Got to really know what you're doing. Your entry really was above the $23 mark, but even then, if you held but till the end of the day, it's 57 cents. You didn't catch this whole move unless you were already long from yesterday. These type of big gap ups and big gap downs are a lot of times very difficult for entries. From a daily, you can see it coming up here, 23.57, starting to kind of push its way towards this upper level. I really think that this 50 moving average is a very plausible play for FAS. FAZ on a 60-minute also falling to the downside, breaking these lower levels that we talked about. Once again, good entries, but just on gaps like this, one, hard entries to take, and two, not a lot of movement after they happen. So if you did go short here, did go long FAS, great. There were good entries, just not for a lot of big profits. And that's exactly what we expect to see, or what I expect to see from an options expiration week. It's only compounded by the fact that we're in earnings. This could be right back up here tomorrow morning. It's so hard to play these things. I do recommend that you maybe look to play more from an intraday standpoint than a swing trader standpoint, unless you're in it for the long haul. FAZ on a daily, this is it. See, guys, I told you we broke this blue line, and we got a couple of moves and a couple of closes below it. Nix der gut here, just continued moves to the downside, breaking these heavier levels that I talked about in yesterday's video. So this is certainly more bearish, obviously. Now, if we get the bounce, maybe we can come back up into this area, but I wouldn't be playing for a bounce right here. I'd just be sitting on my hands waiting for some confirmation. That'll do it for today's video, guys. This huge wave continues. You got to play it for what it is. Wait for it to break these more major levels before you take your trades, and be careful holding overnight. And see you guys again tomorrow. Bye.